Good day, crypto trader. Bitcoin price awaits CPI announcement to re-establish directional bias. Bitcoin price shows signs of volatility ahead of the Consumer Price Index, CPI, announcement scheduled to take place today at 12:30 GMT. The consensus is that the CPI could land at 8.1%, which if true, will indicate a fall from the previous 8.5%. A sign that inflation is falling would be bullish news for traditional markets, but if the announcement shows higher than expected CPI, then there is a possibility of a steep sell-off across all risk-on markets. Bitcoin price shows reversal signs. Bitcoin price rallied roughly 20% since September 7 and has tagged the $20,692 and $21,874 targets mentioned in previous articles. Although a reversal here seems possible, Bitcoin price might extend to $23,164 to fill out the imbalance, aka fair value gap, FVG, first. Hence, investors should be careful about getting trapped in their premature short positions. The objective of the bears would be a sweep of Monday's lows at $21,525, followed by a sweep of the previous weekly low at $18,497. That this bearish outlook aligns with the macro outlook raises the chances of a reversal happening. While things are looking up for Bitcoin price, a flip of the $25,000 hurdle into a support level will invalidate the bearish thesis. This move would trigger sidelined buyers to step in and catalyze a run-up to $28,000. Ethereum bulls fold before the merge, but this is why ETH price pullback isn't a bad thing. Ethereum price is giving up on its bid for a pre-merge rally amid concerns over rising inflation levels. The leading smart contracts token exchanges hands slightly above $1,600, with losses expected to close below the same level on Tuesday. On the bright side, this pullback might give investors another chance to catch an anticipated merge-triggered bullish breakout above $2,000. Rising inflation wreaks havoc in global economies. Ethereum price bows to selling pressure. Global markets, including crypto and stocks, have given back tentative gains on Tuesday following reports of hotter-than-expected inflation levels in the United States. The country's Consumer Price Index, CPI, inflation grew by 0.1% for the month and 8.3% annually throughout August. Market participants expect the Federal Reserve to continue tightening the monetary policy, which could further cause more pain. The Federal Open Market Committee, FOMC, will be meeting in September to review measures in place in August. A 0.75% rate hike seems very likely, making it the third one this year. Meanwhile, Ethereum losses are unlikely to stop at $1,600, a support area reinforced by the lower boundary of an ascending trend line. The Direction Movement Index, DMI, is on the verge of confirming the Ethereum price downtrend. Traders wishing to short Ethereum price to the 100-day, blue, simple moving average, SMA, should be on the lookout for the plus D as it crosses below the DID. Further confirmation will stem from the price ratifying a break below the ascending channel. Ethereum price pre- and post-merge rallies are still possible, notwithstanding the global economic pressure. The software upgrade on September 15 will be the biggest in Ether's history, eliciting interest across the crypto space. If investors quickly move past the pullback on Tuesday, they may appreciate vital support areas that Into the Blocks IA map on-chain model highlights. According to this metric, 1.37 million addresses purchased 8.56 million ETH tokens between $1,557 and $1,064. If this region is defended, new buy entries will trickle in as Ethereum price escapes bearish shackles to spike above $2,000. A rebound from support at $1,600 would be largely undeterred due to the relatively weak resistance levels. A seller congestion zone is projected in the region running from $1,609 and $1,657, but it might not be robust enough to prevent Ethereum price from sprouting to $1,800 and later to $2,000. Solana price advances despite bearish backdrop. Solana, SOL, price sees bulls firmly breaking above the 55-day simple moving average, SMA, after they failed to close above it on Monday. Though a telling sign, when viewed within the broader picture, this rally is likely to be short-lived and not yet the one that could spark a big turnaround. Granted, bears are getting weaker, nevertheless, the overall bearish backdrop has not changed as a global recession or implosion of the Eurozone is still just around the corner. SOL price can move higher, the question is for how long. Solana price has risen within this bear cycle several times, as seen in the recent summer rally. However, there is a big element to distillate from this. In the past 3 months, bears have been able to trade, sometimes even deeply, in oversold areas, whilst at the same time bulls never reached overbought. This still shows a dislocation in the equilibrium between buyers and sellers and points to a more bearish outlook. In addition, the current market conditions still point to a global recession kicking in anytime soon. Thus, the SOL price can still potentially rally as much as 14% to $43, but that is likely to be as far as it can go in the coming days when considering the Fed rate decision next week and likely communication that the Fed will not be cutting anytime soon, together with a reminder for traders that the Fed's tightening policy will likely bring inflation substantially lower at the risk of triggering a recession. These two elements have not changed and will probably cause another sell-off soon, with price action falling back to $30. Of course, the bearish background could change if economic data points to a sharp decline in inflation. That would mean that the Fed has done its job adequately and can take its foot off its tighter monetary policy pedal. Expect on the back of that, Solana price to spike higher with big multiple percentage jumps towards $55. Polkadot price sideways as technical barrier remains a black beast for bulls. Polkadot, price action has seen bulls only enjoying life very briefly above the monthly pivot near $8. The biggest issue here seems to be the combination of the 55-day simple moving average, SMA, and that same monthly pivot, both of which imposed a tough cap on price in late August. Price will probably slide further as US Fed expectations recalibrate following the release of likely still elevated US inflation data later this afternoon. Price sees fade in RSI as telling story. Polkadot price still looks to be going for its 5th straight failure in a row in its assignment to break and close above the monthly pivot and the 55-day SMA. This hurdle is very important for bulls to break and then retest before they can start thinking of pushing price action further up to $9. The window of opportunity is set to close quite quickly as the Fed is gearing up for another 75 BP hike next week. Outpacing the ECB and inflation numbers out this afternoon are crucial in going forward. Price might still pop intraday above the 55-day SMA, but so far it has been unable to manage either a daily close or open above the level. Bulls are burning fuel rapidly as bears gain momentum, which could turn into a distribution phase before the next pullback. A fast forward after the CPI numbers this afternoon will see a stronger dollar by Wednesday or Thursday. Once the dust settles that inflation will remain elevated, although not at the previous highs anymore, and this will trigger a return to $6.85 by the end of this week. As mentioned above, a plain and simple daily close or bullish open above the 55-day SMA would do the trick in solidifying a bullish leg higher. Expect to see more investors flocking in to get on the back of the rally and for price action to quickly print a rise to $9. A similar scenario would be needed with a close above the monthly R1, to support some profit taking and limit any fades that might occur.